Welcome to Learn Commerce PU online classes. Don't forget to like our video and subscribe our YouTube channel for all the updates.
Hello students, welcome to second PUC Accountancy online classes. Students, in the previous class we have studied about the balance sheet that is to be drafted in case of joint stock company. Format we have studied, and in today's class let us know about the statement of profit and loss, or this income statement, isn't it? Statement of profit and loss. It is a study about the format of statement of profit and loss. Format will be the same. That is, first we will write the Roman numbers, isn't it? Serial numbers. Then particulars will be there. Note number will be there. Then figures as at the end of current reporting period and figures as at the end of previous reporting period. That is what we have to do here. So I'll do like this. Let me do like this. Yes. Then particulars, note number. Then I will not write the heading here. This is serial number, particulars, note number, figures as at the end of current reporting period, and here figures as at the end of previous reporting period. So this is the format of statement of profit and loss. You have to write the heading statement of profit and loss for the year ending 31st March, whatever the year is, isn't it? So that is what you have to do here. Then if the name of the company is given, then you have to write at the top the name of the company. Then name of the company, statement of profit and loss for the year ending 31st March dash. Then you have to draft the columns. Then you have to write the column headings, serial number, particulars, note number, figures as at the end of current reporting period, and here figures as at the end of previous reporting period. That is what you have to do. I will read out. I will send you the entire format through, that is WhatsApp. Written literature is there with me, so no worries for that. I will take a pic and I will send, so you can draft it, isn't it? So here, revenue from operations. First item is revenue from operations. What do you mean by revenue from operations? That is nothing but sales, friends. Revenue from operations means it is sales. Remember, revenue from operations and cost of revenue from operations, there is a difference. Don't get confused in the examination. If cost of revenue from operations is given, it is not revenue from operations. It includes the profit margin also. Cost of revenue from operations, add profit margin, then it is called revenue from operations. So revenue from operations, then what we will take is, we will take up other revenues, add other revenues. Then we will take up the total of the total revenue, isn't it? This is total revenue, 1 plus 2, Roman 1 plus 2. That is called total revenue. Then we will deduct expenses. Third one is total revenue. Then fourth one is other expenses. Under other expenses, we will write all the expenses one by one. That is, there are many expenses like cost of material consumed, cost of material consumed. It includes the expenses incurred, that is for manufacturing, that is raw materials, isn't it? Raw material purchased, then other materials consumed to manufacture the goods. Everything comes under this cost of materials consumed. That is all the materials like raw materials, maybe some other spare parts you are adding it to make it finished goods, then it should be that the cost of that also should be taken into consideration. So all the materials that are included to manufacture a product should be taken into consideration. The cost of those things should be taken into consideration. Then we'll take up changes in inventories. That is, purchase of stock in trade. Purchase of stock in trade means inventory, right? Goods. Purchase of goods. Then changes in inventories of finished goods. That is, changes in inventory means opening inventory minus closing inventory. That is changes in inventory, right? Then changes in work in progress. Work in progress and stock in trade. Work in progress and stock in trade. Stock in trade means the stock, inventory. Work in progress I already explained in my previous class. That is work in progress which is partially finished goods, isn't it? Partially finished goods are called work in progress. And then employee benefit expenses, the amount that is paid to employees as benefit, like salary, wages, or pension, provident fund, ESI, everything comes under this banner, that is employee benefit expenses. Then finance costs, that is cost of raising the finance. Maybe you have paid interest, isn't it? Or you have paid brokerage, commission, all this comes under finance costs. Depreciation and amortization expenses. Depreciation means decrease in the value of fixed asset, that's tangible asset. And amortization means decrease in the value of intangible asset, like goodwill, trademark, copyright, isn't it? Patents, all these. If there is a decrease in the value of those intangibles, then we will take it as amortization. Then other expenses, if there are any other expenses while operating, isn't it? That will be taken into consideration. That is the total expense. That will be the total expense. Then you will deduct it from the total revenue you have obtained here under Roman Pre, isn't it? You will deduct, you will get the profit before extraordinary items you will get. Then you will deduct extraordinary items will be deducted, like maybe sale of asset, all those things, isn't it? Those will be taken into consideration, extraordinary items. Then you will get, when you deduct, you will get profit before tax, PBT, you will get profit before tax. Deduct tax from that, you will get profit after tax. So you will get PBT here, profit before tax, and then when you deduct tax, you will get profit after tax, that is PAT, profit after tax. That is what the format of your statement of profit and loss is. And we have to solve problem by keeping in mind the items to be disclosed. The order of disclosure of the item should be taken into consideration. That is what we have to do here. Clear? Yes. With this, let us move on to solve. Before solving the problem, let us know some part of, that is a theory part of this chapter. Uses and importance of financial statements. Uses of financial statement. Uses and importance of financial statements, or importance of financial statements. What for it is required, isn't it? They are required to inform the performance of the management to the owners. Who are the owners? In case of joint stock company, who are the owners? Shareholders, equity shareholders are the owners of the company, isn't it? Preference shareholders, no, they are not the owners because they will not enjoy any preferential rights. They will not enjoy, they will not enjoy the voting rights. They have no voting power, so they are not the owners of the company. Only equity shareholders, ordinary shareholders are the owners of the company, isn't it? So to provide information to the owners of the company, that is how the company is performing, what is the profit margin during current year, what is the efficiency of the management, whether the company is going good or not, those information, because they are the investors. Shareholders are the investors, isn't it? They are the owners of the company. They should get some sort of information, positive information regarding the performance of the company. For that, we will prepare, that is a balance sheet and statement of profit and loss. So that is the first use of financial statement. Second one is, it provides basic inputs for industrial taxation and other economic policies of the government. Information to owners, first one, that is shareholders. Second one is, that is to impose tax, isn't it? Or performance of the undertakings, basic inputs for industrial taxation. For industrial taxation, financial statements are required, because on the basis of the performance of the industries, by seeing the financial statements, how much profit is earned or how much loss is incurred, isn't it? By seeing that, the government will make decisions, government will take decisions regarding taxation policy, and tax will be levied on the profit earned by the companies, and it will be reflected in the financial statements that is prepared by the companies. Third one is, it provides a basis for granting credit by financial institutions to raise credit or finance from the market, isn't it? Like whenever you individually approach a banker for loan, what the banker will ask: how much salary you are getting, where are you working, what are you, whether you are a businessman, professional, isn't it? They will ask. And if someone is professional, then they will ask, what is your take home salary or what is your gross salary, show me your income tax IT return, isn't it? Income tax return. So that they will come to know how much this person is earning and what is his repaying capacity. They want to judge the repaying capacity of the borrower. That is the main thing. Because if someone fails after, that is getting the loan, fails to pay the EMI, then it will be a burden for the banker. Actually, who needs a loan? Who needs a loan? The person who has no money with him, isn't it? A beggar needs a loan. Will you provide? Whether the banker provides loan to the beggar, actually he is the first deserving candidate for getting a loan. Because he has no money, so he is begging. Am I correct? So beggar is not getting any loan because he has no repaying capacity. Banker knows. So when a beggar approaches a banker, the banker will say, get out from here, isn't it? He will be thrown out. He will call the security, send that beggar out, isn't it? Because the banker knows, if the banker gives loan, then it will not be repaid by the beggar. Actually, the beggar needs loan, but he will not get. Who will get the loan? Those who have enough money, isn't it? Because their repaying capacity may be more, so they will get the loan easily. Banker will see whether he will repay. That's fine. Sanction. Maybe 1 crore, 10, 50 lakh, like that, isn't it? So that is the sarcastic thing. Whatever it is, let us come to the point here. To raise credit, in case of companies also, in the same thing holds good. The banker or the financial institution, they will ask for their financial statements, because they have to prepare, that is annual return, isn't it? The corporate taxation, for corporate taxation, there's financial statements are very much required. Final accounts are submitted to registrar of companies, isn't it? It should be placed in a shareholders meeting, it should be approved by the shareholders, all these things are there. So balance sheet and statement of profit and loss will be asked by, demanded by the banker or the financial institution to provide credit facilities. So this will help to raise credit from financial institutions. This is the third point to be noted. Fourth one is investors can take decisions to invest or otherwise. To invest or otherwise. That decision can be taken by the investors. Who will invest in a loss-making company? Whether anyone is ready? No, never. Isn't it? Someone is very poor, he has no money with him, no income, whether you will provide loan to him? No, because you know that there is no repaying capacity with the person to whom you are giving loan. But someone is very rich, having enough money, isn't it? Immediately you will give loan, you will lend loan, isn't it? So in the same way, the person who wants to invest somewhere, he will see the safety of his funds. Safety in the sense, the funds should be returned by the company with whom you have invested, or the banker or the financial institution where you have kept your money. You want the principal amount along with interest with safety, isn't it? So safety is very, very important. For that reason, if a company is a loss-making company, no one will be interested to buy the shares of such companies. Such companies shares no one will buy, and ultimately what happens, the company will not get the finance, or it has to go for, that is a costly finance, for which there will be higher rate of interest, exorbitant rate of interest should be paid, isn't it? So for that reason, what happens here is that the investors always see the financial statements, and on the basis of the profit earned or loss incurred, on the basis of that, the investor will decide whether to invest in that company or not, whether to buy the shares or not of that company. So that is another, that is use or importance of financial statement. The next one is informs about the present status of the organization. We can know the present status, whether the company is earning bumper profit, supernormal profit, or whether it earns the normal profit, or whether the company is struggling hard to survive in the market, isn't it? So present status can be easily known by seeing the financial statements. But there is a lacuna, weakness. Some companies, they window dress the balance sheet also sometimes to make the shareholders. So actual value will be inflated, and inflated figures will be disclosed in the balance sheet. Actually, if you physically verify, that will not be there in the company. You may be knowing some years ago, that is Satyam Computers, isn't it? The managing director was accused of that's fraud, that's window dressing the balance sheet, isn't it? So, and immediately the share price, it has come down to, I think, 20 or 25 rupees per share. Actually, it was quoting above 500 rupees. You just imagine the condition, isn't it? So here, present status of the company will be revealed by the financial statements. By seeing the financial statements, we can conclude whether the company is performing well, what is the dividend payout ratio, isn't it? How much profit the company is earning, how much dividend is may be declared during the current year. All these things can be easily known by the investor. Now, moving on to the dark side, that is limitations of financial statements. Limitations of financial statements, or the demerits of financial statements. First one, financial statement, they consider changes in the purchasing power of, they will not consider purchasing power of money. That is, time value of money will not be taken into consideration by the financial statements, because purchasing power of money changes from time to time. 10 years ago, you were getting one masala dosa maybe at rupees 4 or 5. or 3 rupees. Now you have to pay for the same masala dosa, isn't it? How much? Maybe 30 or 40 rupees. So purchasing power of money declines. The capacity of the money to buy declines as the inflation occurs. Inflation occurs, or when the price increases, price level in the general price level in the country increases, in the economy increases, the purchasing power of money or the value of money decreases. So that is the reason the banks and other financial institutions, they provide interest so that the lost part of the purchasing power of money can be rectified, isn't it? Can be brought to the original level, but it is not possible when the banks provide. Nowadays it is just 5 to 6% interest rate. Very difficult. It may take 10 years or 12 years to get your money doubled, but in other investments you can get more return than you investing in the banks and other financial institutions. So that is what the general tendency is. So one of the limitations of that is the financial statement is they never consider the price value of, there is a financial purchasing power of money, that is financial statements inform the people about only the historic data, because financial statements are prepared by considering the historical data. Whatever is recorded in the books of accounts, they never consider that is value of money. Money is changing day by day. Purchasing power of money is not taken into consideration. Then assets shown in the balance sheet may not be actual, that is window dress. I already told you just now, that is assets value may not be accurate. Value may not be accurate. That is, it might have been window dressed, as I already told you. The balance sheet value will be, that's asset value will be increased and shown to satisfy the customers, satisfy the shareholders, and even the reserves are, dummy reserves are disclosed in the balance sheet. Actually there will not be any reserves with the company. So that is another, that is a lacuna or weakness of financial statements. Third one is the accountants, they do personal judgments while using, that is by writing the books of accounts. They will take personal judgments, or that is accounting concepts are used while writing the financial statements may not be accurate. So that is judgments of personal judgments of the accountants taken may not be correct. So that is another weakness of financial statements. Last one is qualitative information like that is retirement of a managing director, or honesty of a cashier, or any other, that is a qualitative information, good reputation of the business, good quality of the product of the business, isn't it? All these are not recorded in the books of accounts, because books of accounts, financial statements, they need only the financial data, that is historical data, rather than the qualitative information. Qualitative information is never recorded in the financial statements. So this is about the theory part of financial statements. Let us move on to the problem part. We will solve problem. Let us open our that is question bank. Take question bank, page number 103. From this chapter you will get only 6 marks problems, friends. Don't worry about 12 marks. 12 marks problems will not be asked. Only 5 to 6 items or 6-7 items will be given. You have to simply prepare the format and you have to place those items under each head. That's all. That's the only work you have here. So let us solve first problem. I will read out the problem and then we will analyze and we will solve the problem. From the following information, prepare statement of profit and loss for the year ended 31st March 2018 as per Schedule 3 of Companies Act 2013. Actually, now it is changed as Schedule 6 of Companies Act 2013. So any schedule they ask, but we have to prepare the latest schedule, whatever we have studied here. So in the same way we have to prepare it. So let me take up the problem, we will analyze and then we will solve the problem. Revenue from operations 5 lakh. Revenue from operation, you know it, first item, isn't it? So if you study the format, it's very easy, friends. Revenue from operation, straight away write the amount, current amount, that's all done. Nothing else. Then purchase of goods. Purchase of goods comes under that is expenses, isn't it? Other expenses you have to write under that. That is expenses, under that you have to write the purchase of goods expenses. Salaries to employees. Salaries to employees, very simple, it is the benefit given to the employees. So it is employee benefit expenses. It comes under employee benefit expenses. Are there any other items related to employees? Yes, leave encashment is there. What do you mean by leave encashment? In some organization, in most of the organizations, whatever leave you have to the credit of your account, there is a limit that after if it is more than 30 days, you can surrender. You can accumulate up to 30 days and then you can surrender the excess of leave so that you will get 1 month basic. Depending upon that is the number of days you have surrendered, you will get the amount for that is a surrendered leave. That is called leave encashment, isn't it? That is again employee benefit expenses. So there are 2 items we have come across regarding employee benefit expenses. So what you have to do is you have to give a separate note for that. Note number 1, employee benefit expenses, show the calculations, write the amount, and here you just show employee benefit expenses, note number 1, straight away write the amount. That is what you have to do. Clear? Then rent and taxes, other expenses it is. Other expenses, no doubt. Repairs to machinery, again other expenses. Repairs to machinery, other expenses. Actually friends, repairs to machinery, actually if it is a huge amount or after repairing the machine will give you more output than the original output, then you can capitalize it. You can add it to the machinery in the balance sheet. You can show like machinery, add additions, total amount you can write. But here nothing is mentioned, maybe minor repair. If the capacity of the machine will not increase even after repair, then it is called minor repair, should be debited to, that is a profit and loss, statement of profit and loss. Here we have to show as other expenses. It should not be capitalized, remember. Should not be shown in the balance sheet. Clear? Yes. Then tax 30% is given. So let us solve the problem. Let us solve the problem now. I'll solve here itself. Clear? I'll write the heading here. Yes. Name of the company is not given, I suppose, in the problem. No, it is not given. So I will write dash dash company limited. Company limited. Draw the columns quick. Dash dash company limited. Statement of profit and loss. It is not profit or loss, it is profit and loss, because we are writing both loss and profit together, isn't it? Statement of profit and loss. Profit and loss. Profit and loss for the year ending. For the year ending. For the year ending year ending. Date is given 31st March 2018. March 31st, March 31st, 31st 2018, right? Yes, that's all. Written. Draw the columns like this. First column, this is for writing particulars. More gap should be there. There should be more space. Here, third one, fourth one. Isn't it? So let me write the column headings. Serial number I will write here. Actually, it is not there in the format. Serial number is not there in the format. But simply I will assign here, or better avoid it so that you will not lose 1 mark. Instead of writing nuisance things and losing 1 mark, better not to write, isn't it? Particulars. Column is particulars straight away. What they did is, they didn't provide a separate column for this. They took the entire column as particulars, and for writing that is items, that is serial number, they wrote on the left hand corner. That is what they did. Makes no difference. So let us start. First one, revenue from operations. Right here, particulars, then column headings I didn't write, I'm sorry. Note number, then third column, you have to provide 2 columns here. First one is amount at the end of current reporting period. Provide one more column. Amount at the end of current reporting period. In rupees, very important. Here, just extend the column. Amount at the end of previous reporting period. In rupees. Yes. Over. Yes, column drawn. Now let us start. First one, revenue from operations. Revenue from operations. Revenue from operations. How much it is? Was given in the problem. 5 lakh, right? In current column you have to write, not in previous reporting period. You have to write here 5 lakh. Clear? Yes. Then other income, it is not there, but let us write here. Second one, other income. Dash nil. Then what next? Total revenue. You have to write total revenue here. Total revenue. How much it will be? Add it together. 5 lakh. 5 lakh, right? Yes. Then total revenue is 1 plus 2, wasn't it? 5 lakh. It's done. Then now expenses. Fourth one is expenses. This is third one. Fourth one is expenses. Under that, write one by one, isn't it? Cost of goods purchased. Cost of goods purchased. Purchased. How much? Cost of goods purchased is given in the problem as 3 lakh. 3 lakh, isn't it? $3 lakh. Underline this. 3 lakh. Then what are the other expenses? Employee benefit expenses. There are 2 items. So prepare note here below this. Below this, leave space up to here, isn't it? Then prepare note. Notes to account. Notes to account. Yes. Under this, prepare note. Particulars, amount in rupees, amount in rupees. 3 columns. Amount in rupees, 2 amount columns. Amount in rupees. This is notes to accounts. Yes, right here, note number 1. Number 1. That is employee benefit expenses. Benefit expenses. Under that, write both the items, that is salary to employees 40,000. Salary to employees. Employees, how much? 40,000. 40,000. Inner column. Inner column. Leave encashment 10,000, right? Leave encashment 10,000. That's all. Only 2 items. Write it in outer column. 50,000. 50,000. That is employee benefit expenses. Then come here and cost of goods purchased, isn't it? You wrote 3 lakh. Then employee benefit expenses. Employee benefit expenses. You can write here A and B. Employee benefit expenses. Expenses. Note number, write it 1. Note number 1. How much it is? You have already calculated over there. 50,000, right? Yes. 50,000. Then anything else? Yes. Other expenses. There are 2 other expenses, isn't it? Rent and taxes and repairs to machinery. So note number 2. Rent and taxes, sorry, other expenses. Other expenses. Under that, rent and taxes and repairs to machinery. repairs to machinery. Repairs to machinery. How much days? 30 and 20, right? 30,000 and 20,000. 50,000. Isn't it? So right here, third one, point C, other expenses. Other expenses. Note number 2, 50,000. Take the total of these expenses, it will be how much? 4 lakh. Total expenses, right here. Total expenses. Total expenses 4 lakh. Now, next item, that is from total expenses, you have to deduct total expenses from the total revenue, right? Then what you will get? You will get profit before extraordinary items and tax. Profit before extraordinary items. Extraordinary items and tax. That is, which one we have to deduct? Total revenue 3 minus total expenses, that is 5, correct? 5. How much we will have? 1 lakh. This minus this, total revenue minus total expenses. That's what we are doing here. No magic here. Clear? Profit before extraordinary items and tax. Now, minus, you have to, there are no extraordinary items, so let's forget about it and straight away profit, there is a tax, isn't it? I will continue here. Let me continue here. Yes. Now, profit before extraordinary items and tax. Now, tax at the rate of 30%, right? So, calculate here 1 lakh into 30%. So, it will be 30,000, right? 30,000. That is, here you provide this to this as 6, that is 7, tax, and 8, profit after tax. Profit after tax, that is PAT. Right here, 6 minus 7, correct? 6 minus 7. That's all. Profit after tax is how much? 1 lakh minus 30,000, 70,000 is the profit after tax. So, this is how you have to solve a problem. So, this ends here. Clear? If you have prepared a note, you have to write the note numbers. So, that is what you have to do. So, I will take up the next problem in the next class. Take an assignment. Assignment. Prepare company balance sheet, imaginary company balance sheet. Prepare imaginary company balance sheet with main heads only. With main heads only. Submit assignment on time. Thank you.
forget to like our video and subscribe our YouTube channel for all the updates.